Hi, everybody. Welcome to our latest webinar in our series for our sector development training program. It's an absolute pleasure to have you listening in to me and hopefully able to see my screen as well. So I'll be sharing my slides and we're happy to share these later on with people if you would like them. My name's Paul Roberts. I'm the Chief Exec here at Consortium. We're a relatively small charity. We have an income ourselves of just under £500,000, but we do recognise that the vast majority of our members have an income way below that. So based on the topic of being finance good practice for small organisations, what I've tried to do is give as broad an overview as possible that could reach out to as many organisations as possible. So it pretty much is a whistle-stop tour of some areas I felt it'd be really nice to cover. And hopefully you might have some questions at the end. And if there's some more specifics that you think actually it'd be really nice if we had some additional information on X, Y, or Z, then please let us know, because we're happy to kind of look at the next series of webinars and training for our Sorry, I appear to have just muted myself. As I was about to say, just to let you know that you've all been muted, but if you want to ask anything, there is a chat function if you're logged into to GoToMeeting. So you can use the chat function if you want to ask a question, or you can unmute yourself and ask. I'm happy to take questions as they come up, rather than just waiting to the end, or if you want to wait to the end, that's absolutely fine by me as well. So what am I looking to cover into the next 40 minutes? So looking at what's the point of finance? So, it's a bit of a Marmite topic, is finance sometimes. People either love it and get all geeky about it, like myself, or you try to avoid it like the plague, whether it's organizational finances or own personal finances. Some of the key areas I think are really important that we should look at. Of course, why these areas matter. Then I'm just going to summarize with some quick top tips for good finance based on what I've been saying. And then, of course, there'll be the opportunity for you to ask any questions, and also let me know if there are things that I haven't covered that would be useful in the future. So, why do we do finances? And this is kind of where I do kind of get all a bit geeky, really, because for me, finance is obviously intrinsically linked to money, but it's not just about being about the money. Good finance is about really telling a story. One thing I really I like to do, especially when we were doing our grant funding, was just to kind of look at people's accounts. And it gives you a really good sense of what that organization is about. And of course, you might get the trustees report at the beginning of their annual accounts, so it gives you a bit of narrative. But when you look at the figures, the stories it can tell, so looking at income levels in that financial year compared with income levels in the previous financial year, why has it risen? Why has it gone down? And so for me, that's how I sort of came to love finance a little bit more, was by thinking about it as being that story. And there's different stories that need to be told to different audiences with finances as well. So it's not just one size fits all for everybody. You need to think about your different audiences, and I'll come on to that in a little bit. Also, when it comes to voluntary organizations, finance is everybody's shared responsibility. So especially when you're thinking about it in terms of trustees or directors of a CIC, that everybody has that shared responsibility. Yes, you might have a treasurer who is the lead on that, or you might have a finance officer internally, or like myself, I'm responsible for finances operationally. But everybody needs to know something. So always think about it in terms of being that shared responsibility. And of course, Another reason why do we do finance? There are certain requirements, whether we have to report to Companies House, Charities Commission, our funders, our own board of trustees, like myself, or your committees. So there's always reasons why we have to do finance. Just a general quote from the Charity Commission, really, that trustees are responsible for directing the affairs of the charity and ensuring the organisation is solvent, well run, and deliver public benefit. Now, I know this focuses on charities and doesn't apply to CICs in the same way, but I think it's just to highlight the fact that there is that collective responsibility when we're thinking about finance, and that it's not something we should look at and go, oh, I have to do this, so I'm going to kind of like trudge through it, do my budgeting, do my reporting. Always think about, there's other reasons why it needs to be done. So, key areas to consider. So this is the slides that are going to follow. There'll be one on each of these areas. So just some of the basics. Just wanted to, I'll recap some of the simple things that we don't always necessarily think about more than once, that it's good to cover. Keeping good accounts. So just some of my thinking around how you might think about how you're keeping accounts depending on your size of your organization. Preparing budgets and reports. So I'm not going to go into kind of writing you a budget, but just some of my general thinking around some good practice in terms of budgeting and reporting. Understanding cash flow. Absolutely critical element of finance, especially in the voluntary sector, given that finance is difficult to find in the first place. Paying people and getting paid, again, is almost one of the basic things that we tend to forget sometimes. Managing risk. Risk can be thought about in so many different ways, but when it comes to finance, it's really important that we think about risk. And just how different income sources make us need to think about finance in slightly different ways sometimes. So back to basics for a bit. Bank accounts. So I'm just going to put all of those up because then I've got other bits on the other side. So bank account. We obviously, once we set up our organizations, we get those bank accounts and they're there. Thinking about, your signatories. So one thing that we came across a few times with our grant funding, which was quite interesting, was that organizations only had one signatory on their bank account, and you've really got to be thinking about things like fraud, due diligence, good practice, especially when you're kind of talking to funders about how you work in practice as an organization. So doing those basic checks around the simple things like, have you got 2 or more signatories, and then thinking about who's got access to your account, who gets the bank statements, who's responsible for compiling them and keeping them, because they're really, really important records. When you do your end of year accounts, then if your independent examiner or your auditor is going to kind of want them. So making sure they're all filed in one place is a really useful thing to just to think about. But simple things in terms of who has access to your account, like who authorizes those transactions. So if you've got 2 or more signatories and somebody sets up a payment, and then who's going to go in and authorize it? Are they available? Because that can be a bit of a challenge for some organizations, and ourselves included sometimes. So one person will set up a payment and then somebody else needs to authorize it. And just ensuring that there's a clear line of communication about when somebody sets it up and then needs it authorizing, who is going to do that? How do you report on that? Because those simple things can make life much, much easier. I'm also just thinking about, do you need to have more than one account? I've spoken to a few organizations and I've said, roughly how much sits in your account at any one time? And I was chatting to one organization, they said, well, we usually have around £50,000 in our current account. And I said, well, do you have a savings account linked to it? Oh, no, there's no point. And actually, think really carefully about, is it wise to have some form of savings account? So Consortium does. So we have a set amount which we keep in our current account in order for our cash flow, general cash flow. But anything other then we'll put it into our savings reserve account. It doesn't bear an enormous amount of interest, but it's £200-300 a year that we wouldn't necessarily have had otherwise. So just thinking about how do we make best of the money that we've got. Excuse me. Also, in regards to some of the basics around, what does your governing document say? Some constitutions will outline, who can be on bank accounts. So it's just really important just to kind of ensure that you're following the rules of your own governing document. And this doesn't just apply to finance. This applies to many, many different areas. And I always recommend organizations just to refresh their memory of what their constitution says that they actually need to do in practice on a day-to-day basis. Treasurers, so obviously it's one of the most difficult positions to fill alongside the secretary in many voluntary sector organisations. But it's just remembering that treasurers don't necessarily need to be accountants. They need to be financially savvy and able to interrogate the finances to an extent, but not necessarily be accountants. I'm not an accountant. I used to be the treasurer for a small organisation because I have relatively good financial knowledge and was able to look at the accounts and pinpoint them. So it's, I've just put this in just because I know some organisations really struggle with finding treasurers, and they specifically think that they have to have an accountant. That's not necessarily the case. Obviously, it all depends on size and the amount of money you're dealing with. So if you're dealing with £500,000 and it's still a relatively, that's still considered to be a relatively small charity, then you've got specific requirements you're going to have to do with your accounts in terms of reporting to Companies House and the Charity Commission if you're a charitable company like ourselves. If you have an income over £25,000, then you have to file your accounts, annual report with the Charity Commission, but it's on a smaller scale in terms of the information you have to provide. And then anything below that, you can have pretty simple accounts. So it's just about kind of ensuring that it's fit for purpose for the size of your organization. Also, who funds you and what are they demanding? Different funders will require different things from you. So if you're working with local authorities and they're giving you a service level agreement, the chances are that they'll want to know that you conducted the work, but they might not necessarily want to know the ins and outs and the in-depth breakdown of how you have spent that money. However, if it's a restricted grant that you've pre-agreed a budget with a funder on, then when you report back to them, then they're more likely to want to know what is that breakdown of that funding you've used, and probably want an explanation if you haven't used it in the areas you said you were going to use it. So it's just keeping on top of the knowledge of this is what different funders require of me and when I need to do it. Obviously, Companies House and the Charity Commission also have those specific requirements, as I was just saying. And also thinking about who do you choose to independently examine your accounts on that annual basis. The larger you become as an organization, the more requirements you have on you. So for example, again, if you've got an income above £250,000, then you have to have an accounting professional who's doing your independent examination. The Charity Commission a few years ago reduced the levels at which you had to have an audit, which is quite handy, but they, over that income level, you still need to have an accounting professional looking at your accounts. So it's just some basic stuff. Sorry if that was a little a bit entry level or boring, but I thought it was important to include. So keeping good accounts. And some of the things I'm going to mention here around, whether you're going to use spreadsheets or software, different types of accounting practice, and ensuring going back to that storytelling and the narrative of income and finance. Excuse me 1 minute. Oh dear, you'll be glad you're not in the room with me, coughing all the time. So what resource have you got available to you, and what size of organization are you is really important when you're thinking about how am I going to keep my accounts and so I can make it good practice. If you've got an organization that's completely volunteer led, or you're very small and just got a very part-time member of staff working on your finance stuff, then you need to keep it proportionate to the size of your organization. And that's a really important. I think people become a little bit worried that, I've got to have these elaborate systems to keep track of my finances all the time. Well, actually, for small organizations, that's just not true. Yes, some people might like using fancy systems and using structured things like Sage or QuickBooks. But for many really small organizations, just a simple Excel spreadsheet or equivalent can do the job for you quite suitably. So it's a good thing to analyze. How many transactions do we have going through our accounts each year? If you've got, say, only 20, 30 transactions going through your account each year, then you really keep it really, really simple. Just use an Excel spreadsheet would be my recommendation. If for that few amounts of transactions, then there's no point having those elaborate systems. A, because you're going to have to pay for them, and B, it's going to be probably a lot more effort for you. So there are two types of way organizations can account for money. There's cash-based accounting, and then there's accruals-based accounting. And the larger you get, the more likely it is that you'll do accounting on an accruals basis. But for those small organizations, I was just saying, cash-based accounting is simpler. And that's really about being looking at income and expenditure. So when money comes physically into your bank account, then you account for it. When money physically goes out of your bank account, that's when you will account for it. Whereas with an accruals-based accounting approach, it can give you a much clearer picture of the health of the organization, help you to think longer term, and build that longer term picture of an organization. But what it does, it accounts for money at the point you put it into your system. So, for example, if you were to invoice for some training on the 1st of March, for £5,000, but you then didn't receive that money for 2 months, you are accounting for that money on the 1st of March if you're using an accruals-based accounting, and then you're just noting in your accounts that you've got creditors. So for small organizations, it tends to be cash-based accounting that you will use, but as you grow larger, then accruals-based. And actually, there are requirements for organizations with an income over £250,000 from the Charity Commission to use accruals-based counting. And again, going back to the keeping in mind that accounts need translating. So that story that you're telling with your accounts needs to speak to others. And so try to make it as easy for yourself, if you're in charge of the finances or leading on the finances, for when you've got to translate it and tell that different narrative to somebody else. And really simple things again, but keep your receipts, number them methodically. So the system we use is we process all of our transactions with a year and a number. So for example, this year we use C22 1100, for example. So that stands for our consortium's 22nd year, because that's what we are, 22 years old this year. And then that'll be the 100th and 101 first transaction. And just for us, we find it as the simplest way of keeping track of how many transactions we've had a year, what year that transaction was kept in. So we're not looking at transaction 101 thinking, oh, was that from this year, was from the previous financial year? So just adding the C22 for us makes it just much easier for us to kind of keep track to analyze. Also just kind of categorizing groups, and I'm going to come on to this in a bit when I'm looking at budgets and reporting. But just don't forget that if you're doing the finances, yes, you're translating it for other people, but if you're producing it, you need to understand it. So make it as clear for you as possible. Now, there's going to be times when different people are producing budgets across an organization. If you're are larger, so if you're in our organization, we have various different projects and people will lead on different things. So just keeping an eye on that harmonization as well when it comes to keeping good accounts, because that's something as organizations grow, and I'm going to touch on this more in a webinar that I'm doing in a couple of weeks' time, where things can start becoming less consistent, let's say. But I'm not going to go into that now because that is for my next one. My computer's decided to go to sleep. Bum, 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 bum. Another good thing I kind of like with keeping your accounts is what you call a chart of accounts, and this just makes it much easier when you're thinking about, oh, you know, how do I make this easy for myself? This is all just fictitious. Just I'm here. I just kind of quickly pulled this table together for the purposes of this. So chart of accounts makes it easier for budgeting and trying to align money together. One of the issues we can have sometimes is that funders will prescribe this is the budget template that I need you to use, which can be a bit of a pain when you look at your own internal systems. So it's trying to navigate a way where you can align the two together. This is just a really simple chart of accounts, which enables you to kind of track simple money, and ours is a little bit more complicated than this, but this is I've tried to kind of show this one as being as simple as possible, being for a small organization. So the top two rows are showing your bank accounts, and we provide a code for everything. So the way we code things depends on what the type of income it is. So a bank account is a physical entity itself. It's where the money is housed. So we give them 0 codes, so we know that they're sitting slightly outside of everything else. And obviously they'll have an account balance, which is so if you're using Excel spreadsheet, it'll be on the Excel spreadsheet, or if you're using a system like QuickBooks, like we do, that will be the balance that system is showing. And then there's the bank balance. And you would hope that the accounts balance and the bank balance do marry up. If they don't, then reconciliation is a really important thing to think about, and making sure you're keeping track of knowing what you're spending, but also what's going through the bank account physically and when. Then below those two rows, then there's the income accounts, and what we classify incomes as the 100s, just because it's it's the lowest number, so it makes logical sense for us to start with the lowest being for income accounts. So I've just put grant A and contract A, because you're going to have different types, but it's all categorized as income, and then I will keep track of what's been spent in that grant or that contract per year, and what's the physical bank balance left on it. It's not a bank balance, so which is why there's NA in the rest of the bank balances. And so you might want to add another column with what that physical balance of that grant or that contract is. And then below that is kind of where it sort of gets much more detailed and more interesting, and you're able to split down what you're physically spending as an organization. So these are all expenditure accounts, phone, rent, rates, and events. And anything from 2 onwards for us is an expenditure account, and we have different categories. So for example, all of our 5 accounts will be something related to internal stuff. All the 6s will be related to professional fees. So if we're paying consultants, or we've got licenses for something, all our 7s are for staffing costs. So we can kind of block together all of our staff costs. But as you'll see, if you look at rent and rates, you see the codes are 5101 and 5102. And the reason, we do that, so we kind of try to block things together. Because rent and rates are interrelated, we try to make the codes as close to each other as possible. Because when we're doing our analysis of accounts, we can just do a search on our 5100s and know that rather than saying, oh, we've spent £8,657 on rent, we spent 1,472 on rates, trustees and funders are more likely to want to know, well, actually, what have you spent on premises costs, for example? So you can just bundle them all together and just calculate what you've spent as a whole in that area, rather than having to drill down. But for yourself, as the person who's leading on those finances, it's quite useful to be able to say, well, actually, when I'm thinking about budgeting ahead now, which we'll come on to in a minute, so this year, I know we spent £248 on the phone. Say that is a whole year. So next year, I know that I need to budget 250 quid for phone bills, maybe a little bit more because they're likely to go up slightly with the retail pricing index, but it's roughly around that. So it sort of also helps you with your future budgeting as well. I'm sure I've made that sound very, very complicated there, but yeah, chart of accounts is a really useful tool for just being able to keep track of different areas of expenditure, so income, expenditure, but then being able to drill that down into other specific areas like premises, staff, project costs, and then also then drilling down further into those individual areas like phone, rent, rates. Preparing budgets and reports. So things I want to add, these are the things I'm going to cover quickly. So preparing budgets, reports, it's about thinking ahead and scanning that horizon. Some of the organizations I've spoken to in the past, and I've said, how do you know what's coming in? Oh, you're like, well, I know I've got these grant applications in at the moment, and I hope that's come in, and I know I've got this one already, and I know, and this one I've already spent the money. And I said, well, do you have an annual budget? What's your process for thinking ahead about money? And so many times I've heard organizations, well, we don't think about that. We think about what we're processing right now. Always advise organizations to just think ahead, scan that horizon, and produce and agree an annual budget. So our process for doing this is that every January, I will work with our treasurer to say, okay, this is what we spent this year, and we'll break that down looking at project costs, but we'll also look at the core costs. So our core costs being our core team, our phone, our internet, any events like the AGM that we have to do, and we go, okay, so what did we spend this year? Can we compare that with previous years? So we know roughly what we need to allocate for that in the next 12 months. We go through all of our areas and we slowly agree where we think we need to spend money in the next 12 months. Now, obviously, the caveat with that is that there's always going to be unknowns. A funding opportunity might come up in year that could be quite a healthy amount of money that was a project you weren't thinking about at the beginning of the year. That's absolutely fine. What you do is you take it and you revise and you add and you reflect back on the original budgets. But what it does is that it provides you with that starting point. And one of the other key things in terms of risk that we'll come on to is it just about knowing where you're at with finance, and as the finance lead, protecting yourself as much as protecting the organization. So there can't be any queries about, well, should you have been spending that? There's maybe something dodgy's gone on here. Whereas if you've got a full audit trail, this is where we started point, this is where we agreed that we were going to spend money in the next 12 months. It creates that much healthier atmosphere, and particularly with finance being somewhat of a tense subject sometimes for many trustees, operational teams, by having something defined at the beginning of the year can make those conversations much easier. And then reflecting and reporting back at each board meeting. So again, it sounds so simple, but I think it's so important to reflect back on where you started at the beginning of that year. So we'll use our annual approved budget, which the board will approve in March, which they're about to do for us. And then throughout the year, we go, well, are things at the point we thought they would be by now? And then we can go, well, yes, things have got better, things have got worse, and then we can do those revisions. But there's always that baseline that we're referring back to, which makes it easier for those who don't necessarily understand finance as much as others to be able to process that, because they've got something to, that they can start from as well. And thinking carefully about what you're actually presenting in terms of financial information. One of the things I've been working on recently is trying to be more visual with my finance information for my trustees, because I have some trustees who are less engaged with finance because it's not their area of expertise, and they're not particularly au fait with particular accounting practices. And so what they want to do is see something quite visual that tells the story that I am trying to tell. This, and on this next slide, if my computer will go to the next slide. This isn't mine. It's just a picture I've poached. Just a way of visually presenting your finances and that story to a board of trustees. So on here, it's showing, where the organization is spending money in terms of the bar charts. Well, this is what we were expecting to spend. We haven't spent this, but we've spent more in this area. The cash flow, this is where we expected. So again, it's always looking at tying things back to that annual budget that you created, whilst quite easily going, right, okay. So if you look on the benchmarks under the aim and the actuals box office, we were aiming at a 75%, but it was actually 72, so it's pretty close to what we were expecting. Above that, you've got some concerns that we'd highlighted previously. So it's just we're adopting something quite similar now as an organization, and I found it's a really useful way of engaging those who are less interested in the finance side, which is why I thought I would include this. Oh no, I've started singing. Understanding cash flow, really, really, really critical. I can't emphasize that enough for any organization, because it's, again, a topic that people tend to forget about. Finance isn't all about what's coming in, it's also when it's coming in or when it's going out, and being prepared for that is so important. And cash flow really, really is king with this. So I can't recommend enough for all organizations, and it can be really, really simple or really quite elaborate if you've got a bigger organization and there's lots more areas that you need to spend money on. But just producing a simple cash flow, because then if okay, yeah, we've got a guaranteed income of say £100,000 over the year, and we know that we need to spend out £95,000, great, that means we've got a £5,000 surplus. However, if you're not going to get, say, £50,000 of that £100,000 until the end of the year, but every month you're consistently having to spend the same amount, because you might have, if you've got employees, they obviously need to be paid, then you're likely going to spot a bit of a cash flow problem. And if you know it's there, then you can possibly do something about it. So it might be that you could go to your funders going, this is the payment schedule you've given me. You don't want to pay me as much up front. You want me to get some of the grant right at the end. However, when I look at my cash flow, that means we're going to be in deficit partway through the year. Is there something we can do about it? Funders are much more amenable to those sorts of conversations if you can show them where the problem is, and this is what the solution could be. If anybody wants any support with building cash flows, this is one of my geeky areas that I really enjoy doing. So I'd be more than happy to kind of talk to anybody about building a good cash flow. I've got a template that I use that was given to me years and years and years ago, that I've just constantly used because it works really, really well. So if anybody wants that, then more than happy to share. Another, as you'll see with lots of these, they sound like really simple things, but they're so important. Payments that come in and payments that go out. Nobody enjoys paying their bills, but it's a necessity of life that, we buy things, we have to pay for them. If you have a service from an organization, you've got to pay for that service. Well, that's the intention. Obviously, some of us give away things for free a lot of the time because we want to do things. So uh, being really clear that you will be invoicing promptly. So if you're delivering a lot of training, then not thinking, oh, okay, I'll invoice everything at the end of the month. Yeah, that might be best for you as an organization. But if you already know that your cash flow is a bit of a challenge, then the quicker you invoice, then the quicker you might be able to get that money in and help with that cash flow in some circumstances. So simple things like we are on our all of our invoices, we put um, that we expect payment within 30 days. That anybody who's had a membership fee invoice from us will see, it will say net 30 on it. Anybody who we've done work for, it will say the same thing. It's just so then we've got a mechanism for being able to chase people to say, we invoiced you and it's been 2 months and we did say that we wanted that within 30 days. You need to pay us now. Obviously, I might be a bit harsher if they hadn't paid me for 2 months and or if it was due 2 months ago. But it just kind of gives you that sort of a bit more of armory to be able to chase people up for those that pay you. Obviously, conversely to that is also paying your own bills promptly. Some organizations can be fooled by high bank balances sometimes and forget that actually there are some large transactions that do need to go out. So they look at the bank balance of say, oh look, I've got £50,000 in my bank. That's fabulous. But if 40,000 of that is earmarked for stuff that has to go out, then actually you've only got 10,000. So it can be just being mindful that bank balances don't always reflect what money is really available, because unless you've paid stuff. Also, accidents happen. Make sure you know what is and what isn't paid properly and check about the bank balance. And that's really related to the last bit about you don't be fooled by those big bank balances. Sometimes you go, oh, everything's fine, and then you realize you haven't paid something quite large. So always make sure you're reconciling what's going through your accounts, whether it's your Excel spreadsheet or whether it's QuickBooks or Sage or whatever system you're using, and your bank balance. It's a really important accounting thing to do, particularly as organizations grow, is doing that reconciliation between the two things to make sure they're constantly balancing. Otherwise, there is a risk that you can forget to do things. And then I mentioned risk, so I'm going to quickly move on to risk. Writing it down. Now, really, that's about having a really good policy, a basic finance protocols document that everybody works to. So whether it's a part-time member of staff who's doing finances, or it's a volunteer, or it's just one of the trustees, or it is a senior member of staff, that basic finance protocols document is in place so everybody knows whose responsibility for specific things is what. So it could include things like authorizing transactions. So who is authorized to set up transactions, who is authorized to kind of do the secondary authorization, what timescale do transactions have to be authorized by, and being aware that if somebody says they're going to authorize it, does somebody check that? Had a situation in the past where I set up some payments and I had word from somebody that they had authorized the payments, but I then checked and they hadn't actually been authorized. And so having those checks and balances in place, and just all of that outlines in a basic finance protocol document, just makes things easier should things go wrong, and so everybody is really clear on their responsibilities. So it outlines your key decision-making processes and reporting requirements. Thing with finances is about transparency and accountability. It's really important. That helps protect you if you're leading on finances in terms of fraud. and the openness with your board or the rest of your team. Just keeping things as transparent and accountable as possible. Also, organizations, and I just threw this in at the last minute, having that a reserves policy. Obviously, organizations plan on spending things, but not everything always goes to the plan that we have. So sometimes you might need emergency monies, or the organization might unfortunately need to shut down. So having that reserve policy, so you've got that backup as an organization, is really, really important. An average tends to be between 3 and 6 months of operational costs that's just kept in the bank account. So we keep ours in a separate account from all of our other money. So if worst case scenarios do happen, then there's a little bit of a fallback. Now, it can take a long time for organizations to build up their reserves, but even if you're just at the beginning of a journey of growing an organization, it's important to think about that early on and start building it in. In terms of risk, there is a specific webinar that my colleague Vicky is going to be running on risk on March the 23rd. So do check your member dashboard on our website if you are interested in that. Income sources. I just wanted to cover just how different types of money can affect, and some of the benefits in terms of finance that people can sometimes forget about. Because different income sources do require different thinking. So if you are a charity, so this won't apply to CICs, I'm afraid, then make sure you're registered with HMRC, because then you're going to be able to claim gift aid. So if you're getting donations from individual taxpayers who are in the UK, then you can get that extra pot of money on top of those donations. Now, one donation of £20 and being able to claim gift aid on that might sound really, really small, but if you're getting regular donations of those amounts, it builds up quite quickly and can add quite a significant amount to those donations. But in order to be able to claim for gift aid, you've got to be registered with HMRC, which can be a bit of a pain sometimes, but you just got to be methodical with that. So it's just making organizations aware that when it comes to finance, those different income sources, think about the things outside of the immediate realms of money coming in and going out. How do you maximize the money that's coming in? Grants are usually going to have restrictions on them, so that's going to give you less flexibility over what you can and can't use money on, because you will have pre-agreed it. So when you're building those funding bids, just thinking about your internal costs, your full cost recovery, your management fees. So you're kind of giving yourself a little bit of a leeway. Most funders tend to accept around 10 to 12% as a management fee or full cost recovery for bids. That you slowly builds you up a little pot to help towards your reserves, towards your core costs. So it's just about thinking of that, but thinking about in terms of when you're budgeting, that if you tell a funder you're going to spend a restricted grant on X, Y, and Z, that you need to spend it on X, Y, and Z, don't spend it on A, B, and C, otherwise they might ask for the money back. Obviously, unrestricted funds are the best, but they are the most difficult to source, which is why we kind of build in things like management fees and full cost recovery, because it helps to kind of continue to build that pot. And just being aware about things like trading. So a lot more organizations are doing activities like running events, delivering training, looking at CPD accredited training, and bearing in mind that that is tradable income. And that if that becomes a significant part of your organization's finances, then it has the potential for attracting tax. So if you're a slightly larger organization and you're bringing in more than £85,000 worth of that sort of income, then it's likely you need to register for VAT. If you do have just generally a significant element of your income as trading income, then HMRC can look at that and ask you to do a corporation tax return, which can be quite laborious. Charities generally are exempt from corporation tax. But if HMRC suspects that you have high levels of trading income, they can ask you to do those returns. So it's obviously always better to be prepared for these things. So it's 15:15, so I'm just going to quickly summarize some of the top tips that come from this. Keeping it as simple as it needs to be. Finance doesn't have to be necessarily really difficult. Keep it manageable and proportionate to the size of your organization. Be creative visually when you're reporting, because it will keep people interested. Have that financial protocols document, really, really important. It sets out your golden standard internally as an organization, and it protects everybody who is dealing with finance. It protects the trustees, it protects staff. So it's a really, really important document. Be methodical and consistent. Keep track of different types of expenditure through your chart of accounts. That way you're able to drill down into where you're spending specific amount of money. But for the trustees who might just be interested in, like, well, what are we spending on events? What are we spending on premises? You can bundle those things together in your coding system and just go, in total, we spent £20,000 in this area. Whereas well, actually it was 5,000 on this, 6,000 on that, etc., etc. Trustees might not necessarily want that level of detail. So just having that chart of accounts enables you to do that methodically, but also give you both the flexibility to pull out the data that you need. Encourage prompt payment and make sure you do the same, especially if you're working with other charities a lot. Never forget about cash flow. So important, because if you haven't got any money in the bank, then you can't pay anybody. I believe that is me. So have I missed anything for anybody? Does anybody have any questions that they would like to ask? You can